Not a heck of a lot happening this morning. Since the PPI numbers have come out, though, they have gapped them and run them hard. So they were sitting down here at 1488 for the numbers, and they crammed them all the way up here to 1500. We have gotten short again. I wouldn't necessarily advise this to anybody with a weak stomach, but I'm going to be placing my bets that this market high will be in after this Fed for the next 6 months, and I'm putting my money on the line, and I'm getting short 14.98 all the way up to probably 15.28. I'll be adding all the way up there. So if we get a rally post decision today, I will continue to sell it. Lehman Brothers reported a 3.2 drop in fiscal third quarter net income, which, again, you can't have a market without leadership from the brokers and the banks, and I think we're going to see probably another 10 to 20% drop in the banks over the next 6 months. So that's kind of my long-term objective on the banks. I would be watching them. We're far from over and out of the woods. Lowering a quarter point is not going to make anybody buy more houses, especially when the lending requirements are much higher than they were 2 months ago. And overheard an anecdotal conversation the other day that a doctor friend of mine, his wife, said that they're building a second house. They can't sell their first house. They're trying to get a loan. Again, this is a guy that's making 300-400 grand a year. He was denied. They were denied a mortgage on their second house because of the lack of opportunity on selling the first house at the price that they think they can get. So he's going to have to get this is a mid-40s guy. He's going to have to get a cosign from his father, who was a very wealthy man. So take it for what it's worth, but there are still tight lending standards out there that are going to make it difficult for people to buy any house, let alone any house over $400,000. So the higher jumbo rates make it even more difficult. If you have a house that you can't sell and you want to build or move into a second one, you're going to have to sell that first house before you even think about bidding on a house, which is really going to slow everything down. And again, you'll continue to see this be a factor. The VIX coming into, we haven't looked at this in a few days. The VIX coming into the meeting here is 26.48. It was up slightly yesterday, and I would say that this it's gotten somewhat bullish. Again, staying above 20. I'm bullish volatility still in here, and in fact, I do own a pocket of calls coming into the meeting. The long bond is still hanging around 112 and a half. Here's that chart. Nothing happening really there. Housing index had a nice rally yesterday into the pending release. Hovanian said they sold 2,100 homes over the weekend, by far exceeded what they thought. We'll see how many of those close. That's a whole different number. I've heard the same story here again locally. Again, realtors saying buildings are full and occupancy is full, yet 2 years later, I'm still seeing them advertise for 75% of the space. So you got to be careful. The guys that are selling you this stuff and are just as they're hucksters many times. These realtors, no more than real estate clerks. They could work at Gap just as easily, and you could probably plug them into the system there, and they do the same job. They're just waiting for retail traffic to come in, baby. Gold 724.60, again very inflationary. Traded up to 730 this morning, has pulled back here to 724.60. You can see the 10-year. Why are we seeing rates rise? This is very interesting. Rates bottomed again last week in the high 42s. We're sitting at 45 here on this move. The last 5 days we've done nothing but go up. So the 10-year, the market, the real market, is telling me rates should be higher. And again, looks to me like we bottomed here last week, and I want to be long the 10-year note based on this chart. Again, that is pointing upward. So you got rates on the rise. Dollar yen 115.64. Again, get me up to 118. I'm a seller of this again. I've been watching this for a long time. Traded down to 113, 112 and a half. late last week. Now it's on its way back up as we rally in the markets. Dow futures up 61 points. Baidu trading up another 6. Baidu is the gift that keeps on giving. It's trading 258 right now. Here's the 60-minute chart there on Baidu, and Baidu is ramping 258, getting very overbought. Definitely due for a pullback, but momentum's in its court and doesn't seem to be stopping it. Adobe up $1.50 on earnings and upgrades, etc., etc. That's really about the volume. Millennium Pharmaceuticals is up about 10%. And those are the big volume traders here this morning on the NASDAQ side. New York side, I know Goldman's trading up $3 into their numbers. FXI, China, is up. Deutsche Bank is up. VMware, the new IPO, tech IPO, is up $1.85. Lehman is actually trading up $1.38 on their poor earnings and cutting of Salesforce, etc., or cutting of workforce. That's about it. There is not, we're going to have the Fed at 11:15 Pacific, 2:15 Eastern, and we'll be waiting and firm anticipation for what is a very telegraphed, most talked about event that shouldn't be a surprise to anybody. I think personally, I think the Fed should do nothing, and really, which is, I know it's outrageous, but I think they should be raising rates still and really cooling the economy a little bit. But they will not do that. They'll only do a quarter, I believe. I don't believe. I think the high is probably in for a short term, and I think we need to go down and test some bottoms here. So after this very widely telegraphed event, we should be done for a while, and we'll see if that in fact is true. Watching the Aussie dollar also, again, get that up to 84.5. 80. I'll probably be a seller of that also. It's trading 83.50. Tick down here to 82 and change, trading very technically. So again, you get me up to this 84.5 area, and I'll probably be a seller of the Aussie dollar. Back later, probably post-Fed, as I don't expect much to move and shake until then.